downgrade on this stock, holding it back over the last 24 hours. I'd like to see this one find a bid. We'll see whether it can do so. Do I like it as an investment? Hell no. But I do think that PayPal is another one of those candidates of the wild west out there. Did we see a movement into utilities or defensives? Not yet. Still not really extra. They're holding their ground, both healthcare, utilities, staples, etc. But we haven't seen a massive move into them, usually showing us that we haven't got a rotation of the big players coming out of the market just yet. Let's talk about options. Let's move over to the unusual option activity. Tesla managed to hold up to its 90-day average again. Tons of calls coming in, pushing the market up, getting close to that 262 or 4 gap that we spoke about. So congrats if you've kept holding it. I thought it might crap out at 220, 230, but it just didn't even show one sign of weakness. Again, price action is everything. Predicting those highs, even at this stage, we might think 262 is a good high, but if we don't get a turn on the markets, what are you going to do about it? You can't really attack it. Let's move over to some other ones that have found some interesting positions recently. We've got this movement in AMD that was negative on the session after they had their little, kind of like big day talking about how great everything is. That's more of a buy the rumor, sell the fact. I think AI, 14.7%. But some notables here was Intel, of course, finding strong calls the day after we spoke about that huge position that went in. Disney continuing up its pretty strong days, 0.8%. Maybe you could say it's underperforming, but that's there. And even with so many extra volume trades on Broadcom, it kind of topped off in my opinion. Now, I think Broadcom's posted its high. I also think NVIDIA is kind of floating around its high, so that'll be interesting to see moving forward. Here are the put call ratios for everything. You can see here the calls starting to get close to the puts on the SPY. Q's still very heavily put driven, which is a bit of an issue for it to go down. And of course, IWM moving towards the call side, interestingly there, 49.51, so pretty much flat. Let's move over to the biggest trades in these markets. And you can see here that it's still call side for the last 24 hours. No super unusual puts that I saw through the top big ones. There are a couple of puts coming through, but most of them are 0DTEs all for this week. So nothing notable there. When we move over to stocks, you can see that they're starting to push that 260 narrative on Tesla. Biggest position of the day was a call volume, 260. And then we had some interesting ones, AMD making up the list here with people getting a little bit nuts on that, but a big put as well. And as we scroll through, you'll see some familiar, horrible hyper stocks coming through. Rivian, Neo, Nikola, wow. And then we've got SoFi continuing to make up that list as well. And as we scroll through, SoFi and Intel getting some nice big options on it on the 0DTEs. So have a look through a list like this. It's always important to know what's going on with the 0DTEs. I did notice that there's a few of these smaller ones that are getting a little bit longer dated. Could that mean they're about ready to go again? We'll find out. But yeah, certainly be watching the price action. Here's what the Fed, or at least the economists, think about is moving forward here for June. Now, I want to show you this because we have only a 4.6% chance now. This is priced out of the market at this point that we'll get a rate hike. Now, you guys voted on Monday that there was 26% chance of a rate hike. Take a look at July, though. All of a sudden, oh yeah, we're going to get a rate hike. Why would they pause now and then rate hike then? I guess it would just be because they're waiting to see another report to see whether it's still sticky and they don't want to attack the markets too much. Well, yeah, anyway, there you go. So 61% of economists think the rate hike's coming and they just think it's going in July and not June. So interesting point. Let's have a look at rotation coming through the last 5 days. Some super sleuths figured it out. Jets was the one. And a few of you mentioned it in the Monday live stream. Congrats if you were in that, I guess. Another nice session for Jets. Oil coming down, I guess, has helped that, and inflation coming down in those sectors. Semiconductors have now regained as the second best over the last 5 days. Consumer discretionary also getting nice rotation into it. Defensives, trash, have not found super bid over the last 5 days. And we need that to happen if you are trying to be a bear in these markets. Let's move over here to the last 24 hours. We've got clean energy, metals, which we knew to stick away from for now. Copper broke out a little bit to the upside. And of course, some of the most hated sectors recently getting their rotation. And that's the type of thing you want to see with generally a market that is improving underneath the hood. Let's move over here to TLT. Nothing much going on. We know there's a whole bunch of treasuries being listed. I'm watching this one very closely. I think treasuries is an interesting investment. As a trade, not so much. but I'm looking to see whether any of these levels get hit. And I've, of course, got search alerts for that just in case. We move over to the dollar. Now, this was one that in the private community I was mentioning as the news came out from inflation. We saw this initial spike up. That was actually a pretty excellent short. It's part of our day trading masterclass, that type of entry. And that was a phenomenal little entry here. It's actually hit the target, which was that red box. It did so with a gap, actually, on the futures here. And you can see, and I wouldn't be surprised at all to get that one to fill. But dollar was generally weak off this announcement. And I think the reason it went weak was because the chance of a Fed hike went out. Now, of course, if they're raising rates, dollar becomes more sexy to own because you earn more yield. At this point, well, it's only 5% chance. If they do raise rates, you have to expect the US dollar to generally find bid over the next 24 hours. And although it's moved underneath, I could see it move back up, then possibly sell. Be careful here on the dollar. Big gap here on the futures market. Certainly one worth watching with the roll. Let's move over to gold. Gold is floating in the middle of nowhere land. So it hasn't broken out of any of our ranges yet for gold. And you can see here it's just around its little buy zone that it's come down to a few times. We know there's a lot of trade for shorts coming in around 1976 to 1980. So at this point, this is where the sellers are. This is where the buyers are. We're waiting for the news to push us to either direction to show the next level of equilibrium's on. Oil is kind of similar. The buyers sit here around the 66, kind of 80 or 67 level. Then the sellers sit around that 73. So we know it's a big trade zone here and here. We know that this has become a bit of a demand zone. I don't really like to trade this type of market, but you can see where the buyers and the sellers are. No extra information yet. In terms of a recession call, can you call one now? No. We haven't seen, of course, the economy weaken in the US, which is jobs, but also we need the US 2-year versus 10-year to go underneath what we call 1% inversion. So basically, that until that happens, statistically, you'll never get one. Just something I wanted to mention. Tesla. Now let's look at the individual stocks in the US. Tesla has moved to almost the gap level, and that is a big zone. Now for Tesla call buys, I mean, this is already surpassed these 3 candles. Generally, that means you're in an exhausted market. And I will warn you of that. That is an exhaustive style move. And it tends to happen with blow-offs. So you've got to be a bit careful about these ones. A big read here. We are hitting the targets again. And do you need to be scared? Well, you should be cautious, but there's no turn point on Tesla just yet. This level and around 300 are the clear next zones if this thing keeps running up. And while I still remain, eventually I think this thing will go lower. For now, it's 0DTE driven. And of course, we mentioned that since the 190s. And why? Because it became clear it was in this type of thing. You do not want to short this market without a good reason to do so. And we don't have one yet. Let's move over to Apple. What's going on with Apple? It's definitely slowed. So that's an all-time high here, 184 with the goggles. Then the goggles have pushed it back up again. And we are at a point where it's unable to make a new high while the rest of the NASDAQ is doing it. So the big players are slowing down, not only in options trade, but also we're seeing them slow overall from a point of view of price action. And these could be starting to show like those signs of topping. Do we have a swing trade change? No. You've got kind of like that high risk, semi-decent reward, high stop loss with the sell here. You're going to win that one probably only about 50% of the time. So you've got to be wary of those types of positions. And of course, keep that into, I guess in your own back pocket in terms of new all highs and stuff like that. When you see these types of things, they're around a 50% move. The other one that I wanted to mention was that we had 60% of all of the options over the last 24 hours, unusually large activity, of course, were all calls. So again, the buy the dip, which has been the best scenario this year, continues to be now. I believe when a market comes down, no one will be buying puts generally. It will be all about buying calls. And that's a big switch from about 2 weeks ago. Huge psychological change here that's happening in these markets. Again, a point where we've seen it before. We did this in August. We did this in February. We've done this, of course, in other periods of time. These are all signals that we've seen before in these markets to be cautious around here. The DAX is doing its dance up here. I don't really see a trend change or anything, so I don't have too much opinion on the DAX. We'll come back to that when the US gives us a ride. And we can see, again, weakness in the Australian market driven by overall demand destruction plus our higher rates here, which are hurting our exports. So if you're an Australian, there's a few reasons not to like the market right now. US 2000, new high, comes into our pocket, hits our most traded zone. Interesting. So we've got now a new higher high. We now have some bases. This red box in here, I believe, holds the key of any turn on the Russell now that we've seen it. So we've got the high to the low to the higher high. We're wanting that to be busted, and that will probably instigate swing trade trends to the downside. For now, it's still bullish. If it does break out this area, just so we're fair with everything, probably next level is around that 1930 and those highs up here. So if you believe in the Russell, that's the next zone. Qs, huge amount of gaps. Wow. Probably some of the most I've ever seen. Maybe the most I've ever seen since I tracked them. A huge amount of Q gaps. There's probably another one in here as well that I haven't marked in. In fact, we can mark it together just so you can see how I mark these if they're there. So this one here was filled. This one here was not filled. So what you would do is you just copy and paste it, put it on the charts, chuck it on behind, and you can see here, I always do it to the close level because that's actually where the gap is. It's not the gap from the high price, in my opinion. It's the gap from the close. And that's the difference I usually go with. So there's an interesting little gap there between the Friday and the Monday. Another one to stack on the list. Now let's go to the futures market so we can see that my level here was tapped, my monthly level. So these are all huge wicks. Anywhere in here is theoretically resistance or supply or whatever you want to call it. Wicks hold orders, in my opinion. This is an area. And really, when we broke out of that zone, you might notice that we stopped kind of talking about trying to, really hammer this market without price action because we broke, we moved to the next level, and the next level is here. So now we're here. Now we're at the zone ahead of the FOMC and all of these types of things. What evidence do we have in hand of a turn? The answer is not much. Not much at all. So we really don't have any type of turn. We have, of course, the higher high. We have a low that we posted in so we can move our markets to those lows. And what I found interesting about the last 24 hours was more the way that it initially traded. So we saw it go low, then we saw it go high, making that higher high interesting. Then we saw it completely revert that, which is actually symptomatic of the market showing you the first move was false to suck people in. Makes a new low. Cool. Okay. This pullback, I expect. This action here, I expect. The action after that, that's the strange component. Generally speaking, what should have happened here is that the market should have done this and probably ended up around there to show us the weakness was in, the trap was set, all of those types of things. Very much watching this 14,960 high. We do know that we've kind of activated the potential here of some kind of miniature Wyckoff distribution. We don't have technical sell signals realistically. If you were short in there, I wouldn't blame you. If you're a day trader and you're just playing the stats, again, you're going to lose a lot of these because you're going counter trend, but it is what it is. So yeah, new lows would be very, very key here, I think, for bears over the next 24 hours and to see whether Jerome's pushing it down. As a swing trader, you're not even close to activation at this point. While this may give you a 2-hour switch of trend now with a low underneath that, so it could be important. The really big level is going to be 14,200 as well. So we'll keep updating you on these zones. We are at what I would call a critical big supply level, huge zone, certainly for the Qs. But we usually hit them at similar times that we hit the SPX. And really, I don't know if we're in an SPX short off. We've got a ton of gaps, very similar. There's actually a lot more unfilled gaps here than I've ever marked. But we've got a lot of gaps. We've got through the extreme zone. We melted it like butter. There was no turn zone. Remember, we had that 42.60 to show us a swing trade turn. We didn't get that as we saw rotation through the market. And the markets are accelerating away now from everything. So all the moving averages, everything's being accelerated. We're at the top of the pocket. We've gone through a monthly R2, pretty rare level to get through with ease. And we're certainly extended. This market is hyperactive right now for sure. Some people would call it crazy. I would just say it's just sucking as much money as it can to make as much as possible for no doubt the lobsters and the Wall Street boffins. So where is this market possibly to go? Well, the Qs are hitting into a zone. There's no doubt. But this particular US 500, do I really care about 43.70? Probably not as a key zone. Usually you would think this is possible, which is a 4,500 once you get these types of breakouts. I'll have a look at the weekly. The weekly close will show us a lot about what this market wants to do. Obviously, if it rejects fully, like other